All right, let's get right into it. The name on everyone's lips today is Resolve AI, ticker RZLV. It's had an absolutely massive day, but now that the dust is settling, there's this huge question mark hanging over it. So we're going to break down what's going on and see if we can solve this riddle together. First, just look at that number. Resolve is up over 16.5% today, and not on some tiny volume either. We're talking over 10 million shares traded. You see a move like that, and you have to ask, what in the world is driving this? And that right there is the million-dollar question. After such a brutal beatdown, is this the beginning of a real honest-to-goodness recovery for Resolve? Or is this just a classic bull trap, designed to suck in hopeful buyers right before the floor drops out again? Let's do some digging. Okay, so to figure this out, we've got to start with the basics. We're looking for the trigger, the catalyst. What's the big news? What's the story that would justify a pop like this? We're on the hunt for a smoking gun. But here's the thing, and this is what makes it so weird. When you check all the usual places, there's nothing. Zip. No press releases from the company, no new SEC filings, not even a big coordinated push on social media. The stock is just moving. And that only makes this whole thing more mysterious. So with no official news, you turn to the market chatter, right? And the big theory, the one you're seeing in the headlines, is that this is all about Amazon. The news about their huge $200 billion spending forecast is supposedly lifting the whole market. The old "a rising tide lifts all boats" argument. But hold on a second, because that theory just completely falls apart when you look closer. For one, Amazon's own stock is getting hammered today. I mean, why would news that's supposedly great for everyone be bad for Amazon itself? And get this, right after Amazon's news came out yesterday, Resolve was actually trading down overnight. The recovery didn't start until later. So yeah, the Amazon theory, it just doesn't hold water. So if the headlines are no help, we've got to go deeper. We have to start decoding the data, because that's where the real clues are usually hiding, far away from all the noise. Let's see what the actual numbers are telling us. First up, let's talk about the short sellers. These are the folks betting the stock is going to go down. Right now, almost 13% of Resolve's entire float, that's all the shares available to trade, are shorted. That is a significant number. We're talking about 28 million shares being held by people who are convinced this thing is headed south. And this leads to a really key metric called days to cover. For Resolve, it's just 1.2 days. Now, a low number like that can mean the shorts are way out over their skis. They're vulnerable. And what's really telling is that they aren't piling on more short bets today. They seem hesitant. And that actually gives some credibility to this green day. Now, let's look at the options market, because this is where the sentiment just jumps off the page. Look at this imbalance. It's wild. You've got almost $500,000 worth of bullish bets, the calls, versus a tiny 37,000 in bearish bets, the puts. The smart money playing in the options world is overwhelmingly betting this thing goes higher. Okay, so if you're looking for one single concrete number to watch, here it is. $2.46. This was a major line of resistance. The fact that the stock punched through it and is holding above it, that's a really strong technical signal. If it can stay above 246, that could be the confirmation we're looking for of a real recovery. So, if it wasn't Amazon, what is the real force at play here? Well, there's a fascinating theory that this isn't about news at all. It's about a hidden battle, a tug of war happening behind the scenes between two very different and very powerful types of traders. On one side, you have the algorithms. These are the high-speed computer programs that have been responsible for so much of the selling pressure lately, just feeding on negative headlines. But on the other side, you have the big institutions. And what we're seeing today in the data in these large block trades is evidence that these big players are finally waking up and starting to buy this dip. So what's the final verdict here? Is it a trap or a real recovery? The truth is, it's messy. You've got nervous shorts, super bullish options traders, and this war going on between the big money and the machines. The market itself doesn't seem to have made up its mind. So how are you supposed to think about this? Well, to navigate all this uncertainty, here's a potential framework to think about. First, keep that key price level 246 on your screen. It's crucial. Second, if you have a long-term belief here, you might consider dollar cost averaging, just investing a set amount over time. It can be a much saner way to play this than trying to perfectly time the bottom. And last, just a word of caution. Be really careful with margin. In a market this choppy, it can be a recipe for disaster.
And that kind of leaves us with one last big thought to chew on. What we're seeing is a battle where the human institutions are buying, but these powerful, unfeeling algorithms could still drag everything back down. And it really makes you ask a much bigger question. In a market that's so dominated by AI and algorithms now, what does a fundamental recovery even mean anymore?